Hey, all you Wall Street winners out there, it's time for our August 22nd, 2022 edition of Wall Street Winners, our 27th year. Unbelievable. Uh, this was not there at the very beginning. It was a different disclaimer, so this one's not 27 years old. Okay, big changes this week. That's it. The rally is over. Now, could I be wrong? Of course I can be wrong. But all the indicators are starting to come together that the seasonal rally that we were looking for is over. Let's take a look at the S&P as a proxy for the market. Three things on this chart tell me that's it. Time for the new bear leg to begin. This is a dramatic call, but hey, often wrong but never in doubt. No, that's our motto here. All right, a few things. Number one, we talked about this RSI getting above 70. There it got to above 70. I've shown this to you the last couple of weeks. Number two, purple predictor divergence, price moving higher, but the purple predictor, the on-balance volume, is showing that the smart money is liquidating. They are distributing the stock that they bought at the lows. They're distributing it to the suckers. I'm sorry, the retail investors up here. And the final thing that triggers me is look at Friday's price action. A little bit higher volume than normal. No big deal, but it is something. But this is the lowest close in, what, a week and a half? That doesn't usually mean a bull market. Now, it could just be a correction and we go make another higher high. And trust me, I'll be all over it if that's what happens. But I'm making the dramatic call that that's the triggering signal that I've been talking about for probably 2 or 3 weeks that tells me we've got to start getting out of the positions that we were in and start to look. In a week, we'll probably start to get short the market again. I'm not getting short this week. Let's wait for a little bit of confirmation. But next week, if we're still showing weakness, I will short the market some way, shape, or form. Let's take a look over here. You can see the little green line shows that buying pressure is going down, selling pressure going up. No surprise there. Here's the RSI, got above 70 again. That's overbought. It's hard for the market. Here's the last time it was over 70. Perfect pick for a high. What about the NASDAQ? Look at this divergence. On balance volume, purple predictor going down, price going up. That means the smart money is selling it to you. No, not you. The guy sitting next to you. He's the sucker in the market. So here we see the same type of situation we saw in the S&P. Seasonality, we're really, this shouldn't even be that high. It should be neutral, period. Utes, on the other hand, we're bullish. We've broken out above our signal. We did that last week. I'm not long the Utes. I couldn't find a good place to buy them with a low risk entry point. Now, here's the other thing. Could we get another 1 week rally? Well, maybe. But the point is, this red line has worked beautifully so far this year. This is when we're supposed to start to see the next down leg in the market. So I think that's exactly what's happening. Now, asset allocation, we had been getting a lot of money coming out of the bond market, and I think we're going to continue to get money. I think we're going to stop getting money from the bond market. I'll show you why in a minute. And as you can see, it kind of slowed down a little bit, but nonetheless, money has been flowing out of the bond market into the stock market because bond yields came down so much, 0.5%, that it became better to buy stocks with 3-4% dividends than buying bonds with a 2% yield. So we saw a lot of money go into those dividend stocks, the utility stocks. That's why they took off, because utility stocks are pretty dull and they have much higher yields, double the yields of bonds. So that money was flowing in. We saw the risk indicator turn down. This is also an indication that they're going into the big blue chips, the boring blue chip stocks that pay dividends. They're going into utility stocks that pay high dividends. Here we go. Global shares, even weaker than U.S. shares. Gosh, we got to get short these global shares. Yield curve, kind of stuck at, let's call it flat. Let's look over here in the lower left-hand corner. So we basically have a flat yield curve right here at the very, very short term, the 3-month area. The next time the Fed raises interest rates by even 0.5%, the yield curve is going to be negative pretty much all across the board. So see you later, economy. See you later. So bonds started to rally. And look at this. On Friday, they dropped. And this was one of the reasons why the stock market dropped, is because bond yields started to pop back up again. Now, our bond key factors, this one right here, this is the gold market. It says lower yields, but all the other indicators are saying higher yields. So we may see that yield curve stay at about flat as the Fed raises short-term interest rates, but long-term interest rates start to go back up again. Another dramatic call. I'm telling you right now, yields are going higher, higher. Our key indicators here are saying that, but of course, fully paid up members see additional analysis, which really puts the nail in the coffin. We're going to see higher long yields over the near term. If that's the case, then the dollar's going to rally, and holy moly, there it goes. Look for dollar to rally. I'm getting long the dollar this week. Gold, that means see you later gold. I've drawn a new trend line. I don't like trend lines. They don't really work that well, but it does focus the mind a little bit. Look for gold to continue to move lower. What about our key indicators? Bearish, kind of neutral, bearish. I mean, maybe that's neutral, but you see what I'm saying. Nothing is bullish here in our key indicators in the gold market. So you gotta be short gold. Crude oil, purple predictor saying buy, 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 but price action says sell, sell, sell. Price action always has to take precedence over a purple predictor. But do I want to get short when the purple predictor is this strong compared to the price action? Absolutely not. And some sectors of the energy world are actually in bull markets. Look at Devon Energy. I was HF Sinclair. These are some stocks I thought of buying. I didn't buy them because I think there's too much risk. But there is some strength back over there. Bitcoin, purple predictor collapse, price collapse back below 22,000. Of course, the big cycle level is 20,000. We got below it 3 times. Then we got a nice little rally up to about 25,000, 26,000. But now we're starting to head down. The smart money, they sold. Notice the smart money sold before the collapse-orama. That's why they're called the smart money. Look for Bitcoin to head lower. We're now making lower lows, still making higher highs. At best, you can say it's a neutral market. But the heavy volume on the drop tells me Bitcoin's heading lower. Time to short Bitcoin. All right, thanks, freebies. Love having you here. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Labs scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented for as a formula, John Kelly, to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. And you get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.